Hello my fellow freedom builders and welcome back to the channel. In today's video we are going to look at two of the big players, or at least one big and one semi-big player in the EV market, in the market for electrical vehicles that we must say right now is completely on fire. It is of course Tesla versus Nio. Nio is not a stock I have been talking much about here on the channel. Tesla I have touched on, and today I'm going to look a bit at both of them, and both of them are completely, they are going up like crazy right now, like rockets. And I have one of them. I bought one of the stocks a little week ago, and one of them I haven't bought yet, and in this video I'll tell you which one I have bought and why I chose not to buy the other one. Alright, as you have seen on my channel and on many other channels lately, the entire EV market is on fire. It is Tesla, it is Nio, it is Workhorse, it is Hyliion, it is Nikola, all of them. And some of them of course are more electrified than others. But as I will show you today, I think that Tesla and Nio are actually two of the better cases in this market. I know that some of you that have followed me for a while might say, well Hans, didn't you make a video sometimes last year that you wouldn't touch Tesla? Yes, I did. And today I'm going to show you why that has changed now, because of course as investors we are always allowed to change opinion when a company is evolving. So let's just have a quick look at the charts for a beginning. And as you can see here, Tesla is going absolutely crazy. And I can tell you already now that Tesla is the one I have bought. I mentioned it at least to my Danish subscribers. I bought it two times. One here at 1050, I think it was, and the other one here just above 1100. And since then, it's not even a week ago, it's just in 3 or 4 trading days, it has gone up something like 30%. Now that of course is nice. We always like to see something like that. You can see the Nio Stock is actually just the same pattern pretty much. Those of you that have seen my latest with the jump trading or the swing trading video, you know why I've taken this trade, at least the Tesla trade. Because we have a green zone over here on the weekly chart, then we have our daily chart with a move up above the 20 SMA, a retracement back and a good green candle, and we could have taken the Nio trade here. However, I didn't, and today I'm going to show you why. Because basically, if you remember a few weeks ago, I made a video about gold mines, and the first of the videos was about the basics of mining. And in that I told you that when looking at mining stocks, you have split them up in something called the majors and something called the miners. And the majors are the one already producing gold or copper or whatever they are producing in their mines. They are getting it up, they have it all, the infrastructure built, they are producing, they are selling. So it is pretty much a company that you can calculate on. You can calculate the numbers, the fundamentals, and say, are they good, are they bad? Whereas the miners, when it comes to mining, are, sorry, not the miners, but the juniors they're called, of course. But the juniors, they are the lottery tickets. They are the one that are just projects yet, and maybe it'll turn out as a success, maybe it won't. And as I see it, the reason why I didn't want to touch Tesla last year was because, in my opinion, and of course a lot of people disagreed, and you were so kind to tell me in the comment section, but in my opinion, they were not yet a major. Of course they were producing, but there were simply too many risk factors that I were not completely certain about. I were not certain about their liquidity. I were not certain they could fix their production problems and so on and so forth. Of course that meant that I didn't get in right on the button, but that is okay. That is a part of my investment strategy. Whereas Tesla now, as I'll show you in a second, are moving into the major league. They are really starting to produce. They have shown that they can survive this virus crisis. When looking at Nio, as I'll also show you today, They're not quite there yet, but they are close. When we look at some of the other competitors that I have looked at, for instance, my favorite little hate object here, Nikola, they are actually just in the beginning phase of the juniors, if we're using the mining language, because they haven't even produced anything yet. They are standing beside a hole in the ground and telling us there might be gold down here, and then we have to trust them on their word here. So Nikola is not on my radar. Tesla and Nio is actually. Tesla I already bought, as I mentioned, and Nio is coming up. But let's just have a look at some of the numbers. Because if we're looking here in Stockopedia, we can see that, of course, the momentum is going crazy right now. It is 98 out of 100, and that is because of the price movement, but also some of the movement in earnings per share we can see down here. And that is, of course, because they're coming from absolute zero almost. We can see that they are going up with almost 10,000%. But what I'm looking at here, of course, the first glance is the quality is not completely there yet. The momentum is great, and the stock rank is not really where I want it. But Tesla is not the typical company I would buy. They are a tech startup, and I'm not allocating very much money into that from my portfolio. I know some of you would say they're not a startup, but in my head they are still kind of a startup. So when we look at here, they have a PEG ratio of 1.8, which is actually quite great. I know some would say that right now they are priced way too high, but the PEG ratio, where you're taking the PE, dividing it by the estimated growth next year, then you get a picture of how much or how little you are paying for future growth. And that is actually a fair number. I like it to be 2. If it is a tech hype company, it can be a bit above 2, but it shouldn't be 10 or 20 or something like that. So that looks okay. You also know that I do like to see growing earnings, and we must admit that in the earnings per share growth year, it has been in the negative territory for a while, but they are estimating that 2020 and 21 will be some good years. And now, as I've said a lot of times lately, be careful in these times to believe these estimates, because it is difficult times. But as we're going to look at just in a second, Tesla has actually proved that they are, if not immune, then at least able to cope with the current situation in a very excellent manner, if you ask me. Now, if we look down here, there's something I really like to see, and that is positive cash flow. So Tesla has actually started to produce cash flow, sitting with money in their hand ready to use. We can see that the working capital are going into the positive, their net debt is going down. All of this I do like to see. They can just pay their interest right now. This number was in the huge negative territory last year. As you can see, their liquidity is not in perfect territory yet, not at all. But it is so much better than it was just 6 or 12 months ago. You can see their sales growth is great, and they are starting to look a bit like something I could believe in, and actually something that I would like to put my money in. And before you start your hate comments down there, as I mentioned in my first Tesla video way back, I actually love Elon Musk as the visionary, as the engineer that goes in and produces stuff and sends stuff to the moon and you know, builds solar roofs and all that. But last year I was simply not certain that the company would survive. And even though I like the case and the manager, the CEO and so on and so forth, I simply cannot put my money in stuff I'm not sure will survive a year more. So some of you might say, well, we were sure. No one was sure a year ago. Maybe you believed or you hoped, but no one was certain 100% that they would survive a year ago. It is looking way better today. When we're looking at, just to see the numbers, the total EV sales, percentage of total vehicle sales by brand, you can see, of course, that Tesla, they are, this is 2018 numbers. I guess that is the latest year they can look at all of them together. But at least you can see Tesla is beating the others, and I think they actually doubled these numbers by now. You can see that brand percentage of EV sales, that many of them, the EVs are only doing something like 1 or 2%, Chrysler 4%. That can have moved a bit since these numbers are a bit old. Of course, a smart car is mainly just an electrical vehicle as well. But Tesla is simply beating the rest of them. When we look at the analysis, and I do like to look at Seeking Alpha, they have some very, very good analysts in there, and many of them have specialized in just, for instance, the EV sector or something like that. And many of them are having some angles, some views on some of the stocks that I personally hadn't seen before. For instance, one of them, this Bill Maurer, I think it is, he's talking about a major November 2020 risk, and that is because of the election in November, as we all know, the presidential election. And what he is talking about, and I will link to this article below, I'll not go too much in depth with that, but what he's talking about is that in United States there is a you can get a bonus from the government if you're buying an electrical vehicle. And up until now, that bonus has dropped off for the different manufacturers when they reach 200,000 product sales. And Tesla was the first one that got to that limit. And right now they're talking about raising that to 600,000. But Tesla is actually just about to hit 600,000 as well, as far as I can tell from the sales. And that means that Tesla can actually be the only one for a while that don't get this bonus, or where the buyers don't get this bonus when they buy a Tesla. All of the other competitors are way below 600,000, so there can actually be a situation, especially when the Democrats, or not when, but if the Democrats are winning the election, then it is way more likely that this new bonus will be put in place, and this article is speculating on how that can turn out. I recommend that you read that. It's a very good analysis, I think. Another thing in here is that you can see the numbers, and one of the reasons why Tesla is going up like crazy right now is that the analysts were actually very concerned about how Tesla and the other, of course, the other car manufacturers had dealt with the entire virus and the big shutdown in China, in United States, and so on. We can see that last year, that this was a Q1 releases of production and deliveries here. We can see that they produced 102,000 Tesla. That's the S and the X, the 3 and the Y here altogether. 102,000 and delivered 88,000. And the analysts were speculating that this number, the deliveries and also the production number, would go way down. Well, the production number has gone down, and without having dug too deep into this, I'm pretty sure that it is caused by the shutdown in China, the shutdown in also their manufacturing plants in United States. But as we can see, their deliveries has actually gone up. The S and the X is down 1,500 or so, but the other models are up significantly here. So actually this number was a big positive surprise for the analysts, and that is one of the reasons why it is shooting up. When we're looking at the numbers for Nio, let's take them right away here also. You can see that they also had some very good Q2 deliveries. The company delivered 3,740 vehicles just in June, which was up 180% almost. So that is also very nice. And the thing with Nio is that it is not long ago where I actually had my doubt if they could survive. And that was mainly due to liquidity. We should know that Nio is, I think it is around 15% of their shares that is owned by Tencent. And Tencent and also the Chinese government are securing their liquidity right now. We should mention also that Goldman Sachs actually gave them a buy the other day, which of course also have helped the stock price. So right now their liquidity is actually very, very stable, at least a time out in the future. So right now it's not as much a question if they will survive, and that is one of the reasons why I have moved them. If we stay in the mining terms, I have moved them from a junior to a one of the at least almost majors, because that right now they are producing. They have gotten hold of their manufacturing problems as well as the Tesla also did, and they have a solid liquidity right now. So right now it is more a manufacturing, a patent development. We should say that Nio is actually not in the same level as Tesla. Tesla has all their own patents. Nio does not really have as many patents, and they're not producing themselves and so on. So they're not really in the same league as Tesla, if you ask me. But that doesn't mean that it can't go up 1,000%. So it is a Chinese based, and of course there are some risks there. We have seen in the trade war, or at least the building up of the trade war again between United States and China. United States have threatened, Trump have threatened to simply cancel all Chinese stocks, or at least give them some very hard terms to live up to if they want to stay on the US stock exchange. You can think of that what you want, but that is a risk we should take into consideration. We should also think, and that could be both positive and negatively actually, because being a Chinese company, there's no doubt that China will do pretty much anything to have Nio survive. And China is a huge player in this EV space right now, in the alternative fuel, in the alternative energy space. I saw in an article that pretty much, I think it was 30% of all the world's patents on alternative energy and alternative fuel is actually on Chinese hands right now. And they are building and developing like crazy right now. I'm sorry for you sitting in the United States, but I am pretty sure that you will be left back in the dust by China. They are putting so much energy into this, and with a Trump administration that has not had so much focus on this area, but pretty much more on coal and oil and so forth, then I think that China is getting ahead here, but only the future will tell. All right. So just to have a quick look at the Nio numbers, let's just sit. We can just look at the Nio stock here, just to make sure we look at that with a couple of possible entries. I didn't go in, of course, that is a bit, that annoys me a bit, but that is how it is. I have to follow my strategy. If we're looking at the Nio numbers, they are way worse than Tesla. First of all, we can see that the earnings quality up here is a 1, meaning it's pretty much the worst, and the overall stock rank is 17, and that's only because the price momentum has lifted it up. We can see that the earnings per share normalized here are maybe getting a bit better on the estimates anyway, but they're not anywhere near getting into the positives, not yet. I might buy stocks in Nio one day, but I do like to see at least some estimates of some positive earnings. We can see that the free cash flow is way below 0. We can see that their net debt is going up, their working capital is going down, they cannot pay interest, they don't earn any money to pay the interest with, and their current and quick ratio are way worse than Tesla. So Nio is not, even though it is a hype stock and all of this, then I still want to be in on the hyped sector, but still I want to put my money into stocks where if we get a new downturn in the market and I don't get out, I do want to put my money into the most solid and the most stable companies that I actually believe and are pretty sure there is a future in. So that is why I have bought Tesla and not Nio. But I do see Nio as one of the upcomers, and I do understand that people that do like the lottery tickets, that do like this hype sector, I do understand why they started buying the Nio stock down around 5, 6, maybe 7. So it is going up like crazy, and it is a stock that could easily hit both $20 and $30 in the near future if the market doesn't crash. So Nio and Tesla absolutely in the good end, Nikola in the entire other end, and then there are some of the other, there is Hyliion I did an analysis on, and there is Workhorse that I put a bit of money in, but that was more like a speculative lottery trade. So the Tesla, I'll probably stay in Tesla for a while. Of course, I have my stop loss and I have my technical analysis that tells me if I need to get out of the stock again. So I hope this gave you kind of an idea into a kind of perspective and a view on my way of looking at stocks. It can easily be that your analysis or your way of thinking about the stock is way different. So if you have another analysis, please write it below in the comment section. We also have the Facebook site, the Building Freedom Facebook site. And you are, of course, always welcome to write me with questions, comments, and so on. I do like the constructive criticism. Sometimes I simply miss something. There's something I don't have in my analysis, and then it's very nice for you to just add in the comments and say, hey Hans, you simply completely forgot this aspect of the analysis, and that is great. Remember, I'm not a financial advisor, so don't take my advice here. Do your own research, your own due diligence, and first of all, take care of your money and yourself out there. Remember to subscribe if you haven't done already. I'll talk to you again soon. Bye for now.